Hello everyone, I'd like to quickly introduce myself. My name is Raghav Bhatia. I'm from Section E, Shaheed Bhagat Singh College, and the topic I've chosen is avoidance of dual control under GST. The topic I've chosen is avoidance of dual control. To understand the topic, first we have to understand the basics of GST system. So I'll start with GST tax. So what's the goods and service tax? It is an indirect tax used in India on the supply of goods and services. It is a comprehensive multi-stage destination-based tax. It is comprehensive because earlier there was a tax known as VAT, which was a taxation which was in a taxation system which was very complex to understand. It the people were facing a lot of difficulty to pay the tax. So after a lot of understanding, Indian government adopted Canadian GST system, which is comprehensive because it has included all the indirect taxes into a one tax and multi-stage, as the GST is imposed at every step in the production process. So yeah. The tax came into effect from 1st July 2017 through the implementation of the 101st Amendment of the Constitution of India by the Indian government. The GST replaced existing multiple taxes levied by the central and state governments. The tax rates, rules, and regulations are governed by the GST Council, which consists of finance ministers of the central government and all the states. The GST is meant to replace a slew of indirect taxes with a federated tax and is therefore expected to reshape the country's $2.4 trillion economy. What is dual GST, goods and service tax, in India? So, to understand avoidance of dual GST, we should first know the basics. So we'll understand what is dual GST. So there are three types of GST. First is SGST, then comes CGST, and then IGST, which we'll understand further. The dual GST structure in India is essentially a simple tax with different taxation rates. The Central Goods and Service Tax, or CGST, and the State's Goods and Service Tax, or SGST. As the name suggests, the dual GST structure implies that both the central and state governments can levy and collect taxes via appropriate legislations. So there are rules in the GST Act which defines who will be given how much tax. It's either central or state or both. Moreover, both governments have been assigned distinct responsibility as prescribed under the Division of Power Statute of the Constitution. Overall, a dual GST structure is designed to align with the constitutional requirement of fiscal federalism. So now we'll understand the details of GST, like what is CGST, then later SGST, then IGST. So we'll start with CGST. Under CGST, it's a tax levied on intrastate supplies of both goods and services by the central government and will be governed by the CGST Act. SGST will also be levied on the same intrastate supply but will be governed by the state government. So that's the difference. CGST is governed by the central government and SGST is governed by the state government. This implies that the both central and the state government will agree on combining their levies with an appropriate proportion for revenue sharing between them. However, it is clearly mentioned in the Section 8 of the GST Act that taxes be levied in all intrastate supplies of goods and services, but the rate of tax shall not be exceeding 14% each. So after division and all the calculation, it has been decided that the rate of tax shall not be exceeding 14% each. Each as in the tax is divided into SGST and CGST. One portion, the maximum tax charge should be 14% and not more than 14%. So now we'll come to what is SGST. So under GST, SGST is the tax levied on intrastate supplies of both goods and services by the state government and will be governed by the SGST Act. And similarly, CGST was the tax levied on the intrastate supply but was governed by the central government. So now to understand it properly, what difference between SGST and CGST, there's an example. So the example is Rajesh is a dealer in Maharashtra who is selling goods to Anand in Maharashtra. So we see Maharashtra and Maharashtra. It is within the state. So the price is 10,000 and the tax rate is 18%, and it's been divided. 18% has been divided into half. The state is getting 9% and the central is getting 9%. So 18% of 10,000 will be 18,000 and 1800, sorry, and which is further divided into two parts, which is SGST and CGST. 1800, 50%, that is 900, or 9% of SGST, or 9% of CGST. 1800 divided by 2, which is 900 and 900. 900 goes to the central government and 900 will go to the Maharashtra government, which is the state government. So now we have discussed what is SGST and CGST. Here comes a new tax, like new classification, which we haven't discussed before, which is integrated goods and service tax, which is IGST. So IGST is a tax levied on all interstate supplies. The previous two taxes were levied on all the intrastate, but IGST is levied on the interstate, that is transactions or purchase or selling happening between two states, different states. So supply of goods or services will be governed by the IGST Act. IGST will be applicable on any supply of goods or services in both cases of import into India and export from India. IGST will cover the international trades too. So exports will be zero rated, tax will be shared between the central and state government. So now we'll understand with an example. Consider a businessman Rajesh from Maharashtra had sold goods to Anand from Gujarat. Now we see Maharashtra and Gujarat. These are two different states. In the previous example, we saw Maharashtra and Maharashtra, the same state. So there was interstate. Now we are discussing interstate, that was intrastate. So 1 lakh GST rate is 18%. So in this case, the dealer has to charge 18,000 as IGST, and the whole tax. In the previous example, we discussed the 18,000 was being divided into 9,000 and 9,000. But in this case, all that 18,000 will go to the central government. So now we'll discuss features of the dual GST structure. We are discussing dual GST structure, that is SGST and CGST. The goods and service tax has two components, one levied by the central government and other collected by the state government, which we have discussed, that is CGST and SGST. Both CGST and SGST apply to all transactions pertaining to goods and services. So these taxes are related to goods and services. Both CGST and SGST are paid to the respective accounts of the central and state governments individually. CGST and SGST are treated individually, implying that the taxes paid against the CGST are allowed to be considered as input tax credit. Cross-utilization of the input tax credit between CGST and SGST is not permitted except for the interstate supply of goods and services. Credit accumulation based on the GST refund is to be avoided by both the central and state governments except in the case of exports, which involves IGST. So input tax at a higher rate than output tax and purchase of capital goods, among others. So these are some exceptions. There is a uniform procedure for collection of both CGST and SGST as prescribed in their respective legislation, which comes under GST Act. The composition or compounding scheme for GST has an upper ceiling and a floor tax rate concerning the gross annual turnover. As a taxpayer, you must submit periodic. So this is an important point. As a taxpayer, you must submit periodic returns in a standard format to both CGST and SGST authorities. That means you have to classify and differentiate and pay using a PAN card in two ways. First, you have to submit to the tax to CGST, and other tax you have to submit to SGST, which has some limitation which we'll discuss further. And each taxpayer is allotted a 14-15 digit PAN linked taxpayer identification number. So you must have a PAN card to pay the tax. Benefits of dual GST. So these are the benefits. Later we'll discuss the problems of dual GST. So benefits of dual GST. The dual GST structure is a transparent and a straightforward tax model with a predefined set of CGST and SGST rates that is the rates are predetermined and predefined, that becomes easy for a taxpayer to pay the tax. The benefits of having a dual GST structure include the main benefit of dual GST is that the tax system has been simplified and has been made so easy that the taxpayers, all the people having a PAN card, know how to pay a tax. So reduction in the total number of taxes levied by the central and state governments, a decrease in the effective tax rate for different goods, elimination of existing cascading effect of taxes, reduction of the taxpayer's transaction cost through simplified tax compliance, increased tax collection based on the broader tax base, and improved compliance. So the main topic, avoidance of dual control. So in class 12th we have studied this principle in business studies, unity of command. That is, a person is responsible and accountable to only a single superior. But in this case, if we understand dual control, we see that the people paying the taxes have liability towards two governments, which is central government and the state government, that is SGST and CGST. So now, principle of unity of command should be followed. That is, it is not only applicable in business but equally applies to the taxation system also. In India, the problem arises due to its federal structure, wherein the center and states have control over respective taxation matters, resulting into dual control on the taxable person. That means, if you see this line, dual control on the taxable person, we'll see that a person has liability and is accountable to two governments, which is central and state. That is the dual control we are discussing here. This dual control causes disputes among state and center. So there are conflicts and disputes because of this control. The avoidance of dual control means that a taxable person should be under one authority, either central or state. So dual control says that unity of command principle should be followed, and a person is liable to either one of them, that is either state government or central government, and not both. So for the economic growth of any country, the taxation system should be based on principle of avoidance of such control. Dual control prior to the introduction of GST. So what was dual control? How was it before implementation of GST? There were many indirect taxes prevailing in India by the central government and by the state government. It led to so many legal compliances. From the perspective of a taxable person, he had to face dual control. The multiple registrations were required under various laws. So this is before implementation of GST. The details of same transactions could be required to be filled more than once at both the center and state level. There were so many returns that were required to be furnished by the taxable person with varied due dates and other compliances. All this created a lot of difficulty and problems for the taxable person, as it was very complex procedure and the taxation system was very complex and wide. So yeah, if we see the chart, it's showing the three types of GST: CGST, SGST, and IGST. After the implementation of GST, this is after the GST taxation system was implemented in India. There should be some reasonable means of determining how the control of various authorities over the taxable person or transactions is decided. The IGST is levied on the interstate sales, and SGST or CGST is levied on intrastate sales, which we have discussed before. So transactions involving multi-stage or large businesses or those in the course of import and export should be under one authority, that is center, and those businesses restricted to one state should be under the control of state government. This has ensured avoidance of conflicting views by tax authorities on the same issue. Significance of GSTR on avoidance of dual control. So GSTR is the tax when we pay when we purchase something. So this is my point of view, what I mean by GSTR on avoidance of dual control, which I have written this. The dual control would mean a businessman will have to file the details of sales transactions with both central and state, and may also have to take necessary license of sales transactions with both. Small businesses may find it very difficult to deal with two agencies for a single purpose, because they might not have various knowledge and capital to hire CAs or taxation system to understand the taxation system. So it is very difficult to deal with both the agencies for a single purpose. So such dual control is not advisable, as it puts traders and businesses to unnecessary hardships. As both the central and the state agencies will vie for their control in GST collection, I see the possibility of having a minimal dual control, with the role of central agencies largely confined to big businesses and state government largely confined to small businesses. So that would be more beneficial and would be more better for the economy and for normal people and businesses. So now we'll understand the example of IGST, SGST, and CGST, all three taxes, in one example. So it would be a very interesting example to discuss. So yeah, let's start. So example: Prakash Limited, a manufacturer in Mumbai, supplies goods to Kusum Limited, a wholesaler in Maharashtra. So if you see, Mumbai in Maharashtra is similar. It is in Maharashtra, so same states. So we see the trade is happening in Mumbai and Maharashtra, which is /Mumbai. So Prakash is selling goods to Kusum. for rupees 4 lakh at the rate 18% GST. So total amount of GST would be 72,000. And these 72,000 bifurcation will be, I'll show you the bifurcation in after a while. So, and now further, the Kusum, the guy who bought the goods from Prakash, is further selling these goods to Mahindra in Punjab. So he bought the goods from Mumbai and now he's selling in Punjab, which is in different state. So here we'll apply the different logic. So the amount is 4,50,000, 18% GST, and amount will be 81,000. That is 4,50,000 into 18%. Now, and further, Mahindra, who is from Punjab, is selling goods at rupees 4,70,000 GST to X. So amount would be 84,600. Now we saw one product being sold further between three different people. So now I'll show you the bifurcation of these amount. So first, Prakash Limited to Kusum Limited, which is Maharashtra to Maharashtra within the state. Amount was 72,000. So 72,000 in same state. So it will be divided in two parts, SGST and CGST. So 72,000, half portion will be given to state government and half portion will be given to central government. So 72,000 half, 36,000 to each government. Now Kusum is further selling that product to Mahindra, which is in different state. So we have learned that if a trade is happening between two different states, so IGST would be applied. So IGST, that is 18%. So 81,000, the whole amount 81,000 won't be divided and will go to the central government. So now, and further, Mahindra is selling that product to X. So similarly, GST was 18%, 84,600, and now the GST has been divided into two parts, 42,300 and 42,300. 42,300 will be given to state government, and other 42,300 will be given to central government, known as CGST. So yeah, we have discussed all three taxes and the problems and the benefits of bifurcation and the dual control has been understood. I hope you liked the presentation. If you like it, then let me know. If there's any changes or anything you would like to suggest, then I'm all ears. Thank you. Presentation by Raghav Bhatia, rule number 391.